Hey everyone, and welcome back to the channel. In today's video, we're going to look at the gold to silver ratio. We're going to break down a few examples of how to calculate different gold and silver ratios. That's right, there are many different ways to calculate a gold to silver ratio, so please stay tuned as we break it down to help you make the best decisions with your gold and silver purchases when we return. Hey everybody, and welcome back to the channel. As mentioned, I'm a Florida Stacker, and I'm a buyer of both physical gold and silver coins and bars. And I do this because, one, I love gold and silver. It's fun, it's beautiful, it's been money for thousands of years, and it's also a terrific way to save. You get to make a purchase, but instead of actually buying something that immediately loses value, and you honestly would have a difficult time selling it to recoup any of that value, gold and silver hold that value and actually increase in value over time. So it's a fun way to actually make a purchase while saving for your future. So what is the gold to silver ratio and why do people use it? The gold to silver ratio measures the price of gold relative to silver. The ratio is used by investors and stackers to gauge the relative valuation of the two metals, which can help inform buy and sell decisions for those purchasing precious metals. To put it simply, if the value of 1 ounce of gold was $100 and the value of 1 ounce of silver was $1, the gold to silver ratio would be 100 to 1. However, using the gold to silver ratio in this manner really doesn't paint the true picture for buyers and sellers of physical precious metals. And for that, we're going to look at 3 different ways that I use the gold to silver ratio to understand which way the market is going in terms of both spot price and premiums over spot, which do tend to change. The first gold to silver ratio that we're going to cover is the standard gold to silver ratio in the example that I already provided. This you can see here listed on the many precious metals dealers' websites, as well as at your local coin shop. This ratio is obtained by simply dividing the current spot price of gold over the spot price of silver, as in the example above. In our example, we are using current spot prices provided by JM Bullion on the top header. Here, gold spot sits at $1,820.69, and silver is currently at $25.57. So dividing those two numbers, we reach our current spot, or our spot gold to spot silver ratio, which comes in at 71.2. So it does, when you look at spot to spot, take 71.2 ounces of silver to equal the same value of 1 troy ounce in gold. Now, I see posts on this channel nearly every video where viewers or subscribers state they've been buying Silver Eagles at spot price from their local dealer, or they've been buying generic this or generic that at under spot prices. And hey, if that's true, congratulations, my friend. Please shop there and nowhere else and back up the truck. However, back on planet Earth in the real world, physical gold and silver bullion coins and bars have their intrinsic spot value, which changes daily, as well as a premium attached to them, which is the additional price or value of the item over its listed spot price. So let's take a look at the 2 cheapest 1 ounce gold and 1 ounce silver options for buyers today with JM Bullion. So here you can see the current low-cost leader for 1 ounce of gold with JM Bullion. That is going to be this Credit Suisse 1 ounce gold bar, which can currently be purchased from JM Bullion for $1,890.68 if you're using a check or an e-check or wire. This is the cheapest way to buy from JM Bullion. This price is $69.99 over spot, or a premium percentage of 3.84%, and that's not bad today. Now, looking at the cheapest price 1 ounce silver round at JM Bullion, we see a price of $29.06 per silver round, which is $3.49 over spot per round, or a 13.64% premium. Yes, that is the current lowest premium for a 1 ounce silver product from JM Bullion. That's the cheapest one today. All right, let's move on. Now, breaking that down with math, we see that while the gold to silver ratio advertised online, like we previously calculated, was 71.2 when comparing spot to spot, the gold to silver buy ratio, however, when comparing the 2 cheapest items, for 1 troy ounce of each metal is actually 65.06 or 65 to 1 when rounding. Therefore, for the price of the gold bar, you would only receive 65 silver rounds and not the 71 as we calculated when using spot to spot. And the reason behind that is the higher premium incurred when purchasing silver over purchasing gold. Now let's look at what I consider to be the most important ratio for both silver and gold stackers that are looking to trade some silver for gold. Now I consider this the most important ratio because most silver stackers that are considering the gold to silver ratio understand that the premium involved with buying physical silver today is going to be higher. While some silver stackers, notably the veteran silver stackers in this community, may abstain altogether from buying silver today, looking at today's prices, they just can't do it. For the rest of us, especially those that are just getting involved in stacking, we are just looking for the lower premium options than some of the coins that we used to stack in the years past that are now much higher in premium. This is why I say coins like the Silver Britannia, the Silver Maple Leaf, the Silver Kangaroo, and the Silver Krugerrand are good choices. Even though the premiums on these coins are high compared to years gone by, they still do represent a better value than stacking many Silver Eagles in 2021. Silver rounds are likely an even better choice for those of us that live in states and countries where we're not grossly penalized for buying generic silver. I know there's a VAT or value added tax in a lot of European countries on certain silver products or silver altogether. So you really have to factor it in based on your location as well. So now let's take a look at the trader's ratio, which is the ratio that someone who already owns the silver coins or rounds, that means you've already got them in your stack. This is what you would be facing if you decided to trade those silver rounds. We're going to use those Sunshine minting silver rounds in this example for that very same 1 ounce gold bar. So in order to do that, we first need to know the buyback price on the silver that we wish to trade. This is important here. To keep it simple, I am using the same Sunshine Mint silver round, which has an advertised sell to us price at JM Bullion of $25.67. In lieu of using silver's spot price for that spot to spot comparison, and also in lieu of the buyer's ratio comparing just the premium to buy either of the two products. So plugging the cost of the gold bar in, which is still $1,890.68, as well as the sell to us or buyback price quoted from JM Bullion of $25.67 for each of the Sunshine Mint silver rounds, well, we're going to see it's going to take 73 of those silver rounds plus a little cash in order to trade for that gold bar. That's higher than the advertised spot to spot gold to silver ratio. And this drives home the reason why I say that purchasing silver coins and rounds is a long-term play. You are going to get burned on your premiums if you don't hold long. Unless, of course, we do see a rather dramatic increase in the spot price of silver, which, could happen. So please take that into consideration. Stacking physical metals is not a quick game. So as I mentioned in the beginning of the video, there are many gold to silver ratios, and the ratio will differ not only day to day with changes in spot price, but also product to product, as each gold and silver item has a different buy price as well as a buy back price from your dealer. All important to understand when stackers are seeking value in their purchases. So before we close out this video, let's take a look at the American Gold Eagle Type 2 versus the American Silver Eagle Type 2. But before we do that, please, will you all act like fairly mature men and women here? I'm not the US Mint. I didn't design this coin, and I don't set the prices at the dealers, guys. My goodness, from some of the comments I have received over the last couple of videos on these particular coins, you'd think I slapped your mama. Please, don't cry to me, cry to the mint and the dealers. I just report the news, folks. I don't make it up. So here, looking at the current price for one American Gold Eagle using the check or e-check price, once more the cheapest way to buy gold and silver online, we have a price of $1,950.68 to purchase the 1 ounce Gold Eagle. That is $129.99 over spot, or $60 more in premium for the Gold Eagle over that Credit Suisse 1 ounce bar that we were showing you earlier. The price to buy one of the new American Silver Eagles today from JM Bullion using the same form of payment and also not factoring in shipping. Of course, there is a minimum purchase amount at JM Bullion to get that free shipping. Well, it's going to cost you $36.51 for one of those Silver Eagles, which means the price of the Gold Eagle, well, you can afford to stack just 53 of the new Silver Eagles for that price of the Gold Eagle. 53 to 1 little bit of cash involved in that transaction. So let's move on because this is really going to open up your eyes here. Here is a comparison to show you the difference between the high premium Silver Eagles and the much lower premium 1 ounce gold bar. Yes, a gold to silver ratio of almost 52 to 1 here. So spot to spot, 71. But when it comes to the physical for physical, if you were to trade or purchase a 1 troy ounce gold bar, well, that would only get you 52 ASEs. That's almost a 20 ounce difference from the spot to spot calculation when you factor in those high premiums on American Silver Eagles today. Now, the traders ratio, trading the Silver Eagles for the Gold Eagle, is also 10 ounces below the spot to spot comparison. That's 61 ASEs. That's what you would have to trade for the 1 gold AGE when you factor in the price you would receive from JM Bullion selling those Type 2 Silver Eagles. I do not recommend this, as mentioned. I think it's best just to budget for your gold and budget for your silver, and we'll talk about that again in a minute. Well, there you go, stackers. There are many ways to look at the gold to silver ratio today, and depending on the product and what you want to do, that ratio is going to change. Now, I personally do not use the gold to silver ratio very often these days. Instead, I have more or less set up a budget to buy silver each week and to buy gold each month, and I just kind of funnel dollars into that checking account on a routine basis. And obviously, as spot price and premiums change, I do have to adjust the products I'm purchasing or maybe the weight in silver or gold that I'm purchasing, but that allows me to, avoid losing the cost of premiums, that is to buy silver when trading up for gold, because those dealers, while they will return some premium for most of your silver items today, you're not going to get all that premium back, and I don't want to see you guys get burned. So for those of you out there, that is, that are looking to trade silver for gold, understanding how to calculate the true gold to silver ratio will help you make a more informed decision. That's it for today, everyone. So hope you enjoyed today's video. I really do hope you have a wonderful night. And as a reminder, we'll see you tomorrow, Monday. It's going to be Monday, August 2nd at 7:30 p.m. Eastern Time for the first Florida Stacker live show. I hope to see you there, my friends. But until then, keep stacking, keep looking for those deals, and stay positive, my friends. We'll see you soon on another video.